Well, Uncle Sam is counting down the days. Best not to be caught with your pants down. Here to make sure that we've got on our belts and suspenders is Thomas Spade, certified public accountant and instructor at CFC's School of Business. How are we going to pay for all that stimulus, Thomas?
Well, through additional tax revenue. And of course, Congress is always looking for ways to do that.
Yeah, wait, what? What? Hold on, let me stop you right there. Tax revenue, you mean we're getting taxed?
Yes.
You mean it wasn't free?
No, it wasn't free. Money has to come from somewhere.
It does.
And it must come from the people. Now, one way they decided to do that, to pick up a big net and make sure people were still going to be reporting income that they had from other new sources like the gig economy, is a new and improved 1099 reporting. So it used to be if you received credit card payments of 200 payments a year, or in the aggregate $20,000, then the credit card processor had to issue you a 1099 for that. So we're talking PayPal, Venmo, Cash App, and the like. One of the earlier packages that Congress passed this year, I think it was the infrastructure package, actually put in a new provision. If you receive $600 through credit card payments in the aggregate during the whole calendar year, then you get a 1099 reporting how much. And then you have to report that.
I don't remember voting for this.
You didn't.
Oh.
Congress did.
I gotcha.
Congress passed this. And so they got to pay for all of this stuff somehow, and that's one way to do it, by picking up some revenue that some people might not have been otherwise reporting. So it's now up to the recipient of the 1099 to report it on their tax return, and if it's not actually income, like if it's a gift or something like that, and the 1099 was issued in error, then it's up to you to report that it's not.
Okay, well, let's talk about child tax credit.
Oh, yeah.
Okay, because this is a big one. A lot of people did receive some stimulus because of that as well, but there was a caveat, and you warned us about this last year.
I did warn you all about this last year. So remember, the child tax credit has good news and bad news. We're going to start with the good news. It went up from $2,000 to $3,000. But here's the bad news. Now when you're calculating the child tax credit on your tax return, you don't get the full $3,000 more than likely, because you've been getting payments for the last 6 months, from July through December, of $250 a month. And so those are advance payments of the child tax credit. So those have to be factored in against the credit that you claim on your tax return. So you may have seen a $2,000 credit on your tax return in 2020. In 2021, it might only be $1,500. But again, remember, you got $250 a month for 6 months. They were advance payments of that credit. So the argument was putting money in people's pockets now instead of waiting until they file the return to get it.
Right, okay. Let's also talk about the expanded earned income tax credit.
Okay, the new earned income tax credit, well, it's expanded, and now it's available to a lot more people who don't have children. It used to be that in order to claim the earned income tax credit, if you didn't have kids, your income had to be almost nothing. But now they've bumped it up to the point where if your income is $27,000 roughly or below, you can actually qualify for some earned income tax credit. But be careful. If you're claimed as a dependent on somebody else's tax return, you don't get it. And if you erroneously claim the earned income tax credit, whether you have children or not, and the IRS finds out about it, which, oh, by the way, it is one of their favorite audit targets, then you can actually be barred from claiming that credit in the future.
Yeah, you don't want to be barred by Uncle Sam. That hurts.
Don't want to be on the naughty list.
No, you don't. Child and dependent care credit.
This is awesome.
So if you do have dependents.
So if you have dependents that are under age 13, in other words, if they are old enough to order off of the kids menu, and if you're paying for after-school care or daycare or something like that, under the old law, it capped out at $3,000 for one kid, $6,000 for two kids, and then you only got 20% of that as a credit. So for most people, it was $600 to $1,200. Now this is expanded. It is now on the first $8,000 of child care expenses. or $16,000 for 2 or more children. So those who are getting $600 to $1,200 as a credit could see getting as much as $4,000 to $8,000 as a credit.
That's only for children. What if you have a dependent who's older?
If you have a dependent who's older, then you don't get it. I mean,
don't get it.
What the IRS says is, why are you paying for child care for your teenager? So.
Okay, I got you. All right. Well, we didn't have time to get to the third stimulus that some people got last year, so we're going to do that the next time you come in.
Absolutely.
And we're going to make it quick.
Yes.
We're going to have you come back real fast.
Awesome.
Thomas, great to see you again.
Great
Thank you
to see
so
you
much.
too.
Excellent
Thank you.
advice as always.
Oh, yeah.
We're back after this.